In the constantly changing world of fundability, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending, how do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. Welcome to the Get Fundable podcast with your host, Merrill Chandler.
It is about damn time. Hi, Merrill Chandler here, your host of the Get Fundable podcast and your guide to the Get Fundable universe. In this episode, no joke. A few episodes ago, we talked about President Biden's desire to establish a credit registry to address the credit invisibles, those 50 million potential borrowers that don't have access currently to low-cost capital markets, right? Well, guess what? In this episode, it's from a Facebook Live that I published last week about the regulators, the Office of Comptroller of the Currency, and its whole host of regulators are now looking to update the Economic Investment Act that hasn't been updated since the 70s, and where it's encouraging lenders to put more money by lending to, donating to, and facilitating low income and moderate income borrowers. This rewrites the entire motivation that lenders will have in dropping cash to make it available to these currently credit invisibles. So when we come back, we're going to do a deep dive, and I go off. It's a soapbox for this one, guys, because this market, 50 million, nearly 20% of borrowers don't have access to low-cost money, and this is one more step. So whether these regulations pass or whether or not they are going to modify them or update them, that has yet to be determined. But right now, this is a current evolution of banking in this country, and you need to know so that you can be a part of this amazing, amazing revolution that's occurring to give access to low-cost money, literally another 50 million potential borrowers. We'll be right back. Welcome, everybody. It is the Tuesday afternoon Get Fundable update. This is where we take a moment and take a look at the news of the week and kind of pull together what some of the interesting and sometimes transformational things that are happening among lenders, government lender relationships, lender borrower relationships, etc. So today we got a doozy. So I'm going to go back a few episodes of this and do a little review. We discovered in early spring or so, there was the big brouhaha about Biden and the administration's attempt to create a new credit registry that would serve the underserved potential borrowers in this country. They call them the credit invisibles. And these credit invisibles are the folks who do not have access to traditional credit because they don't have a current credit profile kept by three big bureaus, Experian, TransUnion, Equifax, nor are they scored by FICO's software, nor so that lenders can't really plug them into an underwriting model, right? So they're called credit invisibles. There's over 50 million people in this country who do not have access to these capital markets, to borrow money from these lenders, right? And so the market, or Biden's proposal, was to create a separate registry. Now, we're debunking a myth. We're just reminding everybody. Some people, the media, made it sound like they were going to replace the credit bureaus, or that this credit registry that they were going to nationalize the credit bureaus. All BS, complete BS, 100% of it. It's a separate credit registry that would have separate underwriting criteria and would measure different trade accounts like paying rent or cell phone bills or utilities. They would use those types of trade accounts in order to establish the borrower behaviors. And then this credit registry would facilitate lenders being able to look at these 50 million potential borrowers that aren't even in our system. Those 50 million potential borrowers and give them a chance at accessing good rated auto loans rather than being stuck with the rent to own and the loan sharks of the finance companies and the high interest rate predatory lenders that these 50 million folk are left to battle on their own, right? Well, what was released actually today is that part of this expansion, the expansion into addressing these underserved potential borrowers, these credit invisibles, is that bank regulators are now looking at the Community Reinvestment Act and rewriting. They want to rewrite some of the rules of what it means for commercial banks and the tier one, the tier twos, even credit unions get involved, what it means to invest in a community and persons who live in these underserved communities. So it's kind of like the alley-oop one, it's the plus one of Biden's attempt to get access to these or give and provide access to these underserved potential borrowers, access to the capital markets. They want to inspire the banks to be prepared to lend in these markets. So it's called the Community Reinvestment Act. It was signed in the 70s. It was designed to help build affordable housing and for low and moderate income individuals, provide community services targeted to these low and moderate income, and fund any activity that promoted economic development by financing small businesses or small farms, depending on where you are in the country. Now, the revisions that is being reported by the Wall Street Journal today, they're changing the definition of what qualifies as an investment in these communities. They're expanding that definition because it's investments in persons or businesses, deposits into the communities, and membership shares or grants that they're providing. All of these, which provide tax credits to large banking institutions, other benefits for investing in these communities. So now we've got two sides of the same equation. We've got the credit, this proposal from the administration to give access to borrowers to borrow money. And now with the revisit of the Community Reinvestment Act, they want to inspire the large banks to invest into these communities. So there's a big focus in getting these credit invisibles into the game. Now, let's just take a beat here. What does this all mean? Because I am apolitical. There's fundability no matter who's in the White House and no matter who runs Congress. Fundability principles still apply. What does the low-income lending rules, what do these modifications mean to the economy, to borrowers? And what does this credit registry and the inclusion of 50 million borrowers into the funding game, what does this mean? Well, in my world, it is all good news because lenders only make money when they lend. But lenders do not have dreams, aspirations. Generally speaking, those boardrooms are not fueled by dreams, aspirations, and ambitions. They're driven by quarterly profits to the shareholders, right? But the dreams, ambitions, and goals of the borrowers are what drive this entire economy. So what happens if we have a 300 plus million people in this country, and we provide, I believe 250 plus-ish are adults, borrower age, and we add another 50 million potential borrowers to this game. And remember, it's not going to happen overnight. It's going to take years for it all to unfold. So it's not going to overheat the economy or inflation concerns. But imagine 20% more movement of capital through our economy. And yet the low income borrowers and these credit invisibles are now not spending the lion's share of their money on interest. Do you know what interest is for one of these payday loans? Minimum of 60% and upwards of 250 or higher percent. And these are cash advance loans against a person's next check. It's robbery. Imagine a borrower who has been faithfully paying back those credit extensions. Imagine them having access to 7% money or 10% money. instead of 60 to 200? How much is left over to improve their lives? The quality, you know my end game, quality of life and standard of living. We want both of those to go up. And the easiest and fastest way for that to do that is to leverage other people's money. And right now, the administration wants to give access to 50 million borrowers to the credit markets. And now the regulators, they come from the Office of the Comptroller of the Currency, that's who regulates the national banks. They're rewriting the regulatory rules so that it can improve the capital investment into these disparaged communities, these underserved, and frankly, the financial rape, pillage, and plunder of these communities, because these folks cannot access low cost capital to improve their lives. And the vast majority of their paychecks, when they borrow, they go to interest of these financial organizations. From my 30 years of experience working with folks who've worked with them, which are unscrupulous and deadly to the economy, because they're paying an interest rather than growing the economy. So, and growing the quality of life and the standard of living of the borrower. So the rules of fundability perfectly fit in the framework of low-income borrowers. It doesn't matter if you're borrowing 1,000 or you're buying 100,000. The principles of borrowing for the lowest possible cost and leveraging that money to improve your life, quality of life, and standard of living. In my world, nothing else needs to be said, guys. So everybody in my tribe, you know my passion on this. I'm ready to inspire, motivate, and educate these 50 million potential borrowers so that they're ready to operate on a framework of fundability rather than, oh, let me get my credit score. Because even the credit score that's going to be developed for these low-income borrowers that are using rent and utilities and cell phone payments, that is not the same credit score that we all know as the FICO. Even if it's developed by the same organization, FICO, it's not going to be the same as when these borrowers end up in the traditional credit marketplace. So this score, we don't want to start getting people focused on that score. We want them focused on fundability. What do I need? What borrower behaviors do I need to do in order to be able to attract lenders to lending me inexpensive money so that I can improve my life? Whew, I guess that turned out to, Sky, that turned out to be a little bit of a soapbox there. But that's what's going on in the world today. Just the marrying of inspiring and re-regulating the lenders and providing a broader definition of what it means to invest in a low income or a disparaged community, and the influence of making sure that these folks get counted and that their credit behaviors are measured so that they can access low cost interest. Both of those things coming together, hallelujah. It only puts more people at access to inexpensive money, and we all win when every one of us win when there is more competition among banks for the money that is charged. There's more value and the employment goes up because 50 million, 20% of the borrowers out there aren't borrowing, meaning they're not buying goods and services. They're not getting a car. They're stuck at a low-income job because they can't travel because they don't have a vehicle because nobody will lend to them, except for the seagull and the rat lenders who focus all of their insane levels of interest, which then guts these low-income individuals and takes a higher percentage of their monthly income. You guys know where I stand. This is Merrill Chandler, your host of the Get Fundable universe. Thank you for joining us in this update. It's all good. I'm loving this. And let's educate them. Let's educate ourselves. Let's all get on the path to fundability. And regardless of where you're borrowing, it will all lead to a higher quality of life and intentional development of a better standard of living for all of us. And that is my goal. Thank you for joining me. Have a great day.
Thank you for listening to the Get Fundable podcast. Please leave comments because Merrill would love to read about your aha moments from this episode. And be sure to visit getfundable.com to read our blog, get important links, join our community, and much, much more, like ordering Merrill's tell-all book that is changing the world, the new F word. And you got to tell your friends about this podcast because we want them to get fundable too.